Hey, it's Dario and this is Coffee with the Markets. And today I wanted to talk to you about Facebook because they released the earnings and actually they are pretty good. So let's dive right into Facebook and see what the earnings tell us. Hey again, it's Dario and this is Divity Trading, a platform where we can share our best tips and tools when it comes to trading, investing or finance in general. And if you love the subject, please consider subscribing. So I was talking about Facebook. Well, we have the earnings, but before the earnings, I wanted to talk to you about the daily active users because, we all thought that Facebook was dying, but actually, it's pretty alive. And we are not even talking about the whole Facebook system. We are not talking about Instagram, we are not talking about WhatsApp, we are not talking about Oculus, we are just talking about Facebook, the platform, and we see an increase and a constant increase in active users, and that's pretty good. A social media platform needs his users. Without users, the platform dies. But if Facebook, the platform, has this kind of increase, I can just imagine what type of increase we would see in Instagram and WhatsApp. Also, let's see revenues before talking about earnings, because the earnings are a little bit not that good, okay? The revenues are better. We see a really strong increase, especially comparing the Q2 of the 2019 and the Q2 of 2018. We have a 26 increase in the revenues. Of course, we have the Q4 always beating the other quarters, and that's fine. But if we compare again the Q2 of the 18 and the Q2 of 19, we see a pretty good increase. 26 increase is really good for a company like Facebook, which is big. Okay, we have to remember that Facebook is big. It's not a small startup and a small company, but it's huge, and having a 26% increase is on top. Okay, I would like to talk to you about the expenses as a percentage of revenue. Yeah, we see that the cost of revenue, it's not increasing that much, okay? What's increased is the general and administrative expenses. If we look at the bottom here, the small text that it's written, what is written there? It's written includes 3 billion and 2 billion in legal expenses. We can proceed to income, to the net income, and we see a little bit of something that I personally don't like. And we will talk about the chart in a moment, because I think that the chart reflects really good this 3 and 2 billion dollars of the Q1 and the Q2 respectively that Facebook had to spend in legal expenses. I think the chart really reflects that, because we have a net income of $2.6 billion, which is way lower than the $5.1 billion of 2018. And also, of course, it's really low compared to the Q4, the $6.8 billion. So yeah, as I said, we have a really strong decrease in net income, which is, you could think about this, yeah, but if they hadn't have the legal expenses, it would be $5 billion, but that's not how you think. That's not how you should think, in my opinion, because the money it's not there anymore. And the net income is crucial for a company. It's the company's job to bring net income. Not having net income means that in the next year they might decrease the investments, they might decrease a little bit the growth. This net income will not influence the growth 10 years from now, but the growth of 1 year from now, it's probably going to be affected by this net income, by this low net income, okay, of the Q1 and the Q2. And also, I think that here it's not still included the $5 billion that Facebook will have to pay. Of course, I think they are already saving for that $5 billion, but I don't think that it's included, because I see here just legal expenses. So I don't see actually the fine. So actually we will still have to wait for the $5 billion, which will bring the growth of Facebook down again and down more. And remember that it's really high. $5 billion is really high. It's a quarter, it's an entire quarter of the net income for Facebook. But now let's talk about why I think that Facebook might be the next Amazon, at least in terms of growth in the stock market. I think that because of the business of Facebook and the fact that it's really scalable. At the moment, Facebook gets its revenue almost 100% from advertising, but that could change change if we think about Oculus, which is still in development, and if we think about the Libra. So Facebook is entering in the virtual reality sector and in the financial sector, and this thing that they are doing is expanding their business and increasing their growth potential, and that's really good. So yeah, I actually really think that Facebook might be the next Amazon. And if we look at the chart, if we go all the way back to 2012 when Facebook was listed, we have a 360% growth, which is nothing, it's zero. If we go and see Amazon, for example, we have something around 85,000% of growth, and that's what I'm talking about. I expect Facebook to grow that much, and no, I'm not kidding, I really expect Facebook to grow that much, especially if they will be able to enter the financial sector and the virtual reality sector. So yeah, that's something where they can grow, and they need to grow there. So yeah, about the fact that investors didn't like the net income, we can see a strong candle when we had the earnings, a strong bearish candle, and I think that reflects again the net income. Okay, the fact that we had the net income, which was not as investors expected. I think that the expectancies in the EPS was something around 1.8, but it was 0.8, and so I think that's why the investors didn't took that news that well. I really strongly think it's going to recover. Of course, this is not an advice on anything, but that's my thought. Also, the stock of the week, we have ERI. I don't know how to pronounce that. ERI. Well, it's Energy Recovery Inc. Okay, the ticker is ERII, and they do something really interesting. Okay, they convert the wasted energy into usable energy. So, for example, if you have a pressure energy, you have motion energy from mainly water. They mainly use water as a source of energy, and they convert that wasted energy, so pressure from machineries of other companies, and they convert that into energy, and that's really good. Okay, also if we think about the modern world where we want to go towards green energy and reusable energy and don't waste things, I think this is pretty good. Also, if we think about the diversification, which is something that we talked about the last week, diversification in countries and products. Of course, we don't have a diversification in products here because the main source of energy, if we want to talk about it like that, it's water, but we have a diversification in terms of countries. So we have many countries where the company takes its revenue, and also we have a strong increase in earnings and revenues, which is something that I really like to see. Also, the short and long-term liabilities are completely covered by the short-term assets. Also, we have no debt and no dividend. Okay, someone will say, well, no dividend and you think this is a good company? Well, yes, I don't like companies that pay dividend because I like the companies to take their entire earnings and put it in the company, invest more and grow more. And also, if we go and see the technical side, we had a bullish triangle which just broke. It's now retracing, and it might be a good opportunity to buy. Again, I'm not saying you have to buy, this is not an advice, but do your own research. I think it's a pretty interesting company just to know what they are doing, what is their business. It's pretty interesting. So yeah, just have a look at it and tell me what you think in the comments. But hey, this was all for this week. If you enjoyed the video, please leave a like and let me know in the comments down below what is your stock of the week, and I'll see you in the next video. And today I wanted to talk to you about Netflix because it seems like it's losing subscribers. And the third reason that I could find is the lack of higher and higher quality TV series. What does that mean? That Netflix doesn't have quality TV series? No, quite the opposite instead.